But moving on, the Indian rupee fell below 85.8 mark today, a level which RBI appeared to defend last week, dealers say. What's led to giving up of this level and what's happening in the market today? Latha is here with more details.
Well, actually, a big event for the currency markets, especially for India, is that the Yuan or the PBOC has allowed the onshore Yuan, that is what you call the Renminbi, to go beyond 7.3. That happened late on Friday. The Yuan appeared to be moving, they stood at 7.29, 7.28 for a goodish bit. But in the end on Friday, they allowed it to go below 7.3. The offshore Yuan, that is, the one traded in Hong Kong, the CNH as you call it, has already gone from 7.33 to 7.36. Again, that happened on Friday. So, the RBI appeared to be defending the 85.8 mark. They allowed it to come till 79 several times and go back. That was happening last week. Then on Monday, that's today, with the Yuan also falling, they have allowed the rupee as well to go beyond that so-called protected mark. Protected for a very brief period, actually, just for 1 week. Now, actually, everything is going against the EMs. You know the list of factors. The dollar index strengthening all the way to 109. Even now, it is 108.86, or 88. It's still very much the 109 level. The US 10-year yield at 4.62, actually. It just makes currencies or funds get more attracted to US. All these exacerbate the US exceptionalism when both the currency and the yields are higher. For India, the added reason, we do watch the dollar, but we watch the Yuan very carefully. I might just actually add a data point over here. In 2024, the rupee depreciated by 3% from about 83 to 85.5. The Yuan also depreciated 3%. So India tries to be in step with Yuan as well because it's our largest trading partner and maximum dumping happens from that country. So you don't want your country to not depreciate as much as the Yuan. You want to keep in step. And of course, as you'll have been pointing out, the crude prices also are slightly adverse. Lately, crude is not a very big factor. The crude price have remained south of the $75 mark. The big talking points are really how the dollar has been rising, yields have been rising in that country, and of course Yuan as well. All currencies competing with India, depreciating. The expectation in the market is, of course, there is a lot of FPI buying of dollars, which means they are selling Indian shares even today. You don't need an expert to tell you that, the way in which the shares have been falling. The fear in the currency market is that the PBOC will allow the Yuan to depreciate even further. People are freely talking about 7.4 and 7.45 before Jan 20th. The impact could be even more if the announcements post Jan 20th when Trump takes over are worse than what the market is prepared for. But even fearing that event, 7.45 is on the cards, which means rupee is also not stopping at 85.8. The move towards 86 looks like a writing on the wall.
Thank you very much for that. That's an important update coming through from Latha.